Shares of Lyft skyrocketing on third quarter results, revenue jumping more than 30% year over year. Lyft also forecasting fourth quarter gross bookings above analyst expectations. The news coming on the same day the company announced a round of autonomous partnerships. We'll talk about that in just a moment. Joining us right now, first on CNBC, is Lyft CEO David Risher. And we should mention this stock up right about now, 23%, David.
Well, there we go.
Nice to see you. So, don't just tell us what happened. I'd love to understand what you think and why it happened.
I think, yeah, go ahead. Sorry.
No, you go.
All right. I think why is customer obsession. I really do. It's that simple. Look, I've been in this job about 18 months now and super consistent from day one. Customer obsession drives profitable growth. I think I've said it every time you and I have seen each other. And that's what's happened. So it's about 6 quarters now that I've been in. Record rides, record riders, record driver hours, frequency up, I think 7 quarters, time after time. And I actually think it's that last thing, frequency. So, how often a person takes a ride, that tells you something good is happening because that says they're having a great ride, it's getting there on time, it's great level of service, and they're taking it again and again. And that's what's driving our growth. It's great to see.
What's happening with pricing? Because there was a question about just the strength of the consumer. There was a question about whether there's a race to the bottom on pricing, which appears to have stopped between you and Uber, especially in certain markets. How do you sort of look at the pricing issue right now?
Yeah. So 2 things. The first is, we operate competitively, right? That's our sort of deal. And so we want a rational marketplace. And we like the fact that prices are, they're strong and good where they need to be. I think the more interesting question, at least from my perspective, is what have we done with surge pricing? So surge pricing, which we call internally prime time, is something I think you and I talked about it last time. We opened up a can of whoop ass on it, if you remember, and that's working. That's working. So surge pricing is down 40% from where it was a year ago, and nobody likes it. It's the worst. It's the thing that sort of drives people bananas. So I think when you think about pricing, the base pricing, is what it is, and it's competitive. I think what we're really trying to do through things like price lock and just great service is get that surge pricing down as low as it can go.
Obviously, we are now just 24 hours, 48 hours after this election. When you look at different pockets of this country and the strength of the consumer, are there certain pockets where it's clear to you that there's significantly more strength and certain pockets that worry you?
Yeah, not particularly. The trends that we tend to see more, actually to go back to that surge pricing, for instance, is where we've been able to lower that the fastest. That's where demand has grown the fastest. And actually, our share grows fast. So Chicago is an example of that. Boston is an example of that. But I don't think that's a macro issue as much as a Lyft issue. Macro, the big picture continues to be, frankly, for us, a lot of back to work action. Even party time. Actually, I should say Halloween was a monster all across the country. So if anything, I see more strength and pretty uniform rather than anything particularly concerning.
By the way, how is Election Day? Is that a big day or no?
It's good. Yeah, it's not a gigantic day, but obviously the shift, people go different places. They go to the polls. We actually offered 50% off anyone who wanted to go to the polls on Lyft that day, and it was super successful. But that was the big news for us.
Let's talk about autonomy, because that is both maybe a huge opportunity going forward, but also to many of the folks who are driving these vehicles a potential threat. What are you doing?
Yeah. So I think it's an opportunity actually for both the operator, whoever that might be. It might be an individual driver today, someone who just buys a car and then wants to put it on the platform. Might be a fleet operator. And I think it's a huge opportunity for Lyft. Why? Because, look, these are cool products. I don't know if you've taken one or not. It's cool. It's safe. It's reliable. It's, it's kind of novel now. And I think it will be for a long time. So that's all good. And the more we can bring onto our platform over time, the better, because we can have a hybrid, kind of view of the world where we've got some people driving, some cars driving themselves. And I think that's the world we're going to be living in for many, many years, starting obviously in the future. But I think even for drivers, look, today a driver has to use both his time and their car. And maybe tomorrow they can buy the car, put it on the platform on Lyft, and not actually have to use their time, do something else for it.
So how are these autonomous partnerships going to work in the future? And who do you expect is going to be, and how much do you worry about a Tesla, for example, turning their entire fleet into these vehicles and not just doing it, but creating their own version of Lyft?
Yeah. So let's look at one of the partnerships we just announced yesterday with Mobileye, who is an industry leader in autonomous technology. Their tech is in BMW and Volkswagen and in Ford and Honda. all around the world. And today it's level 2, right? It's the lane assist and smart cruise control and so forth. The day after tomorrow, at some point, it'll be level 4 self-driving. So the arrangement we have with them is as they develop that, every one of those cars for all those OEMs can be Lyft ready. So those cars can be on the Lyft platform. And, you mentioned Tesla. There's no reason a Tesla owner wouldn't want exactly that same thing. They'd want to come where the demand is. Hopefully, we can come to an arrangement with them where Teslas can be on the platform as well.